Hey guys, this is Vic from Grasping the Market and welcome to our market briefing. Today we had no further change on the larger time frame. The monthly continues trading. We continue trading around the 2880 area, and the week we took the last week's high and we are around those levels. Now on the daily we had a relative narrow range. I say relative because if you look at the ranges from the last few sessions, today was very narrow, and it seems like we have a marginal extension lower just a little bit, and it seems like the market is finding some short-term balance up here. When we zoom into the market profile, the session fully developed inside the overnight session. The poor low that we left on Tuesday was repaired, but it was not possible to take the overnight low, and another poor low has been left in place. And this is the third consecutive session. This is a third consecutive session of Monday, Tuesday, Wednesday that we leave a poor low. The last two sessions struggle to move lower, and the aggregate V-shaped profile at the top of the rally suggests potential long liquidation. With the post non-farm payrolls gains holding. Now I'm gonna stop here for a while and I'm gonna show you exactly what I mean. Short settings. Let me take out the evening. What I mean is that at the top of this rally, it was a very sharp rally. I went back through my historical charts and I have not seen a rally this sharp in the last few even months or years. 1, 2, 3, 4, 5, 6 days with almost no overlapping. That's very sharp to the upside. So when we take the last two profiles and we put them together to see the aggregate price action, what comes immediately is a V-shaped profile. This is very consistent with long liquidation, especially in the context of being at the top of a very sharp move. So what happens is you have a very sharp move to the upside, everybody's going long and fueling that move, and then when the longs start taking profit and they start closing those positions, you have this move down. Now, when everybody who's long is closing their positions, is done with their business, you have this type of flat distribution because it cannot go further down without further selling. And because of the reasons behind the rally or whatever, nobody's selling here. So you move up, some people take profit, it creates this. And normally what happens with this liquidation phenomenon happens is that when the liquidation is done, the market usually tends to resume in the trend direction. So this could be a warning that the market is prepping for another leg higher. Nonetheless, and I'm going to split this again, the consecutive poor lows suggest that there is some of the buying done down here is done by short-term money and is leaving weakness in the structure. So there is risk on those lows. Every time we leave them, you should not rely too much on those. Having said that, the immediate focus is on value developing relative to Wednesday's value area, which, as you see, is very narrow with a very prominent POC. Acceptance above or below that value area will denote change. If we get acceptance below, it will bring into play very likely this Wednesday poor low. And if that is taken, this is a really important level here, which is the pullback that we had Friday afternoon after the non-farm payrolls. At the moment, this liquidation, if it is liquidation, is holding the post non-farm payrolls gains, which is another good indication because if you are long, and at the end you have a fundamental reason for the last bit of the push, when you take profit, people will not further liquidate below this, because they say the market has come down to an area of acceptance, and fundamentally it makes sense that the market stays here or even rallies from here. So the fact that we're holding those gains is a very important clue. Now, if we get acceptance above this, that will start suggesting maybe the liquidation is over, and that will bring into play obviously Wednesday's high. But we need to remember that there is a questionable structure on the way down with a lot of anomalies here on the profile, and that could be due for repairing. So again, as we always say, odds are just odds. Anything can happen. Manage your risk, but this is the picture that we have at the moment. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Any opinions, news, research, analysis, prices, or other information offered by Grasping the Market is provided as general market commentary and does not constitute or replace investment advice. Grasping the Market accepts no liability for any loss or damage, including without limitation to any loss of profit which may arise directly or indirectly from the use or reliance on such information.